what exactly could be a good narrative or story for the markets in 2023 in the final 3 trading days of the year?
So I think if you want to make the bull case for 2023, you start with timing. So the bear market is getting long in the tooth. It'll be a year long here in the next couple of weeks. The Fed is near the end of its hiking cycle, and inflation is heading in the right direction. So you can make the case that a lot of this pain is behind us, and we can start to look forward to kind of a resetting of the economic cycle. But I think what you also have to have is you have to have earnings hold up. So we've seen corporations and the consumer be pretty resilient over the last 2 years through COVID, through inflation, through geopolitical turmoil. But we really need earnings to hang in there. I think valuations have taken a hit, obviously, as rates have gone higher. But if earnings contract in the next year, I think it's going to be hard for equities to be really positive. So we need companies to resume that resilience and stay profitable.
Ross, on that earnings front, on that earnings story, what exactly is your baseline expectation for what the coming earnings season will hold as we look back on the fourth quarter of this year?
I think ultimately you'll probably see an earnings contraction in 2023, but I do think it'll be fairly mild versus what you've seen during past recessions. So you haven't really ever gotten an economic recession without a pullback in earnings that comes with it. Those can be pretty dramatic. Company earnings can really fall when the economy goes into recession. I think a soft landing scenario at this point means a pretty mild recession versus historical standards, and therefore either flat or maybe down single-digit % earnings in 2023. I think that would be a pretty good outcome for markets, all things considered, and that's kind of what we're expecting. Profit margins come in a little bit from their record highs. We're already starting to see that. And then you get earnings kind of flat to down a little bit as the economic cycle resets, when the Fed pauses, when inflation kind of gets closer to that 2% target. And then we can look forward to the rest of the decade, really.
All right. So if that's the case, you're saying that you could see that kind of a recessionary move in the economy. That would theoretically take away some of that inflationary pressure. If that were to happen, what exactly should investors be doing with money right now? Should they be waiting for later on in 2023, or is now the time to get in certain places? And if so, where?
It's a great question. I think it's obviously the number one thing on people's minds. So, I think it's a question of time horizon. If you're a longer term investor, even a year plus, to stretch the use of that word, I think, again, we're starting to get to a point where the bear market is long in the tooth. You can start to see some pretty attractive entry points, especially with the pullback of late. But if you're a little more short term, a little more tactical, I do think it still plays to be defensive and to move up in quality. I think we could retest the lows at some point in the first half of the year. I think the Fed insisting that they want to remain more hawkish than the market wants will keep volatility high in the near term. And short-term rates could have another jump higher as the Fed continues their aggression. So I think volatility in the near term, merits a defensive positioning. But longer term, I think you can start to pick your spots in some of the more cyclical and value-oriented areas.
All right, Ross, you've obviously been looking at a number of different possibilities, scenarios, catalysts. What is the thing that you think could be a real outlier, statistically improbable, that may upset that story either to the upside for the markets or more severely to the downside in 2023?
I'll take the positive till it heading into year end here. I think we have not gotten a boost from productivity whatsoever. So despite work from home, despite people getting thousands, millions of hours back from commutes, all of the innovations over the last couple of years, U.S. productivity has really been down. And so if you don't have a productive workforce, it makes it very hard to get inflation where you need it to be without sacrificing real wage gains, without sacrificing earnings in the process.
Sure.
I think there's a potential that we do start to see an uptick in productivity. And what you can get if you see an uptick in productivity, more output per hour from employers, you can really get a tailwind for a decade long.
All right.
We're starting to see some real innovation on the technology side that I think hasn't been implemented in a positive way yet, but we could see.